mean, there's been plenty of times where you lose money on deals, but that's just part of it, where you learn from it and you don't make that mistake again. Not every deal you make money on, and that's just the reality of it.
The biggest challenge I see for people is they just give up. Then you shouldn't. You just keep going until you find it.
You'll be the average of the 5 people you spend the most time with. That includes friends, family, co-workers. So who you surround yourself is going to determine who you become.
A lot of people are really excited to help you get your first deal, and like they'll give you tips on how they did it. They'll give you information on how to do it. But then at the end of the day, it falls on you.
If you go find a deal and you have a great deal, money always chases great deals. Great deals never have to chase money.
This is the Sphere of Influence podcast, and I'm your host, Moni. I want to thank all of you who are tuning in to listen. I truly appreciate and love your support. So thank you so much. Here we discuss entrepreneur journeys, tips on how to become better entrepreneurs, and how are entrepreneurs using social media to grow their business. And joining me today is not one, not two, but 4 amazing entrepreneurs. Please help me welcome the PMP team, Alex, Angel, Verge, and Mitch.
Hello.
Thank you for having us.
Thank you for having us.
Of course. So tell me, what inspired you guys to come together? And have you guys always been entrepreneurs? Is this your first entrepreneur journey together?
Yeah, what inspired me to get into this industry, I actually met my business partner, Nick. He's on our team as well. He and I met at a real estate meetup about a year and a half ago, and we started just talking about this, and then we slowly started doing deals together, and then we eventually have all of us on the team together.
Nice. So, and Nick, you said he's not here.
Yeah, he's not on this one today, but he is part of the team as well.
And so how did you guys, all 5 of you, come together? Like, did you guys meet somewhere? Like, are you guys all from the same area?
So I met Angel and Verge at real estate meetups a little while ago, and then
Okay.
I met Mitch on a Zoom call. It was actually a sub 2 Zoom call, and we connected. And it's a funny story. Our first Zoom together, we actually were on Zoom for 3 hours together, and we just bonded really well and built a relationship. And now we have a whole team together, and we're just looking to expand and keep doing deals together.
Nice. That's amazing. So having so many business partners can present its challenges. How do you guys deal with that?
The way that we deal with it, we have a different structure, right? So everything is divided, and we just make sure that it's all fair for all of us.
I think everybody brings a little bit of different skill sets, right? For example, I've been in real estate since 2007. I started off as a real estate agent. I worked through the entire last market crash and went through the whole short sale REO era. Experience in flipping houses and apartment buildings and Airbnbs and all that good stuff. So everybody brings a little bit of a different skill set. And I think that when you're collaborating, on teams, you'll have some crossover initially, to help kind of, get the foundation down of what everybody's going to do, roles and that kind of stuff. But when you're collaborating with multiple people, everybody has a different piece they bring to the table. Verge knows, the tech side really well. He's also a real estate agent. Alex, is really good on the phones with talking to agents and loan officers and kind of bringing those relationships. Nick actually is working on the CRM and flow, the actual call flows. And then also, just talking to sellers on the phone as well. And, Angel does the same thing. Like, he's doing agent outreach, he's talking to loan officers and agents, and, negotiating terms. So everybody has a little bit different role, and I think that's probably one of the things, you can't have 5 people on the team doing the same thing. You'll end up tripping over each other, So
Yeah.
I like to call it merry-go-round, or what is it called? Not merry-go-round, musical chairs, right? Like when you're kind of working within a team, you try to find the best spot where everybody is going to thrive the best, and then collaborate together.
Awesome. So what you mentioned, Verge brings the tech, and everybody else is a realtor. Am I getting that right?
So the only people that are realtors are Virgin Angel. Mitch used to be a realtor, but not anymore.
I used to
Oh,
be a realtor, and then I wanted, I kind of moved into full time investor. We have other people on our teams as well that have real estate licenses and that kind of stuff. But yeah, I wanted to be a full time investor, more like Jesse James. I want to come out guns blazing, and I don't want to have anything. I don't want any kind of licenses or anything like that. I just want to be able to talk and have conversations with buyers and sellers, and not have to worry about any of that kind of stuff. So, but yeah. As Alex said, Verge has a real estate license in California. Angel has a license in California also. We have other people on the team as well that have licenses, in California. We're also working on getting licensed right now in Arizona, Nevada, and Colorado too. So,
wow. Very nice. And
mhm.
so, do you guys have a unique approach to real estate investing? And if so, what would you say that it is?
I feel like with like real estate investing, I think the biggest there isn't the right way or wrong way to do it. The best thing to do it is a real estate's a relationship business at the end of the day. So anyone could just hop in, and just as long as you build great rapport with people, people are going to be willing to work with you.
And I'll touch on what Verge is talking about with relationships. I feel like without relationships, you can't get far in this business at all. Because if, for example, if you do one deal with one agent and they see that you do good business, they're going to keep bringing you deals, and you can keep doing that over and over. And you can have unlimited amounts of agents. There's no limit to it. So it's really important to just really build these relationships and make sure that everything goes smoothly with them, and just keep that rapport going with all the agents.
Got it. And if we go take it back a little bit, so tell me more about exactly what is it that you guys do, because I know that I've read a little bit about education part. So what is it exactly that you guys do?
So what we focus on is we purchase. We do a lot of different things. We cultivate relationships with loan officers and agents. Right. There's a lot of properties out there on the market right now that aren't selling. They're sitting on the market a long time. These sellers, either have other plans that they want to do. Some of them need to get out of the obligation of being in that mortgage. Maybe they lost a job. Maybe they're going through a divorce. Maybe they're in the military. They're transferring, from one base to another in another city. Um, the interest rates have seriously impacted most markets in the United States. There's some markets still that are pretty busy, but we're trying to build the relationships with agents and loan officers and educate them on creative finance, subject to, and seller finance. There's a huge opportunity right now. There's a lot of agents and loan officers that are leaving the business just because they're not able to get these deals done anymore. At 7.5 to 9% interest rates, depending on where your credit's at. So what we do is we network with these agents and loan officers, and we explain what creative finance is. We also explain to them what subject to is, and we explain to them that that there's a way for them to get still paid on the property if we're able to give the seller some cash also to help them move on or move past that property. Then we try to do that as well, and we just kind of explain that process. Like, this is what happens if your property, whether it's a listing agent or a seller, because we're working with both. Their property's been on the market, they've already been testing it. They're either not getting offers, or it's not going to sell at the price that they need it to. A lot of these properties could be at break even or even upside down. So, a lot of the options out there that are being presented to sellers are, short sell. And so, the challenge with short sell is that if a seller, let's say they own $400,000 on a house and they short sell it for $300,000, technically they're going to owe the IRS for the $100,000 difference, that their lender forgave the debt on. So they're going to end up paying taxes on that, and it's also going to affect them purchasing a home. Probably for the next 3 to 5 years, they wouldn't be able to purchase a home because it's going to come up on their credit report. The downside to a foreclosure is that it's going to be on your record for 7 years, so you're not going to be able to purchase a home again for another 7 years. when we help the agents and the loan officers understand that there's a lot of sellers out there that are having challenges right now, and we can purchase the property, subject to the loan staying in place. And then there's the other side of the coin is that 65% of everybody who applies for a mortgage gets denied, right? That's a huge number, and that's in a normal market. So, in a market like this where interest rates are, we'll say 8%, over half of the people that were probably purchasing or looking to purchase a home in the past year have been completely priced out. But the loan officers and the real estate agents out there, they're working with these buyers every single day. And sometimes the bank just doesn't like the way they get their income. It could be, they haven't been on their job long enough. They're self-employed like all of us are. It's super, super hard for real estate investors, agents, and sometimes loan officers to get a loan. So same thing with, small restaurant owners or auto body shops or construction, contractors like plumbers, electricians. So what we're also doing is we're helping a seller, either prevent foreclosure or sell a property, that currently is not, selling at the price that it's listed for. And at the same time, what we're doing is we're asking the loan officers and the agents to look at their database. They probably have buyers that are in the database that don't qualify for traditional finance. But they have a down payment. They've got a good work history. They've been on their job for, 2 to 15 years. They can afford to make a mortgage payment, but the bank just doesn't like the way either the income, that they're making. They don't like the income, or they haven't been on the job long enough, or, maybe it could be like somebody who owns a barbershop and they get a lot of cash. And so they just don't like the way that their finances look. So that's a perfect opportunity for us to help them purchase a home. So, a lot of the what we're working on is, just networking with agents and loan officers throughout pretty much every city in every state of the country is what our plan is, and just explaining to them there's a lot of options out here to continue to work in real estate and to help people buy homes that normally wouldn't qualify.
Got it. And for the viewers that maybe don't understand what Subject to is or creative financing, can you guys talk a little bit more about that?
Yeah, so what subject to is let's just go in an example where a seller has been trying to sell their house for quite some time now. They bought it 2, 3 years ago. They have really low equity, right? So on a traditional sale, they're going to have to come out of pocket at closing. So sometimes these sellers have to come out of pocket 10, 20, 30,000, and they weren't able to do that because they thought once they buy the house, they're going to have instant equity. So now they're in a position where they need to sell, and we have a different option for them where we take over their mortgage and now we're responsible for it. So we have to make the payments every single month on their behalf, and we become the new owners. So that's the way that we're purchasing most of these houses, and then we're owner financing other people. So what Mitch was talking about is where we become the bank for someone else that can't get qualified the traditional way.
Yeah, and part of that, what happens too, is that a lot of times people are like, "Oh, okay, so you're going to seller finance it to a new buyer." What we're doing is we've actually structured a way where we're seller financing it to a new borrower who normally wouldn't qualify for a mortgage at 5.5 to 6.5% interest rate, which is below the current market rate. What we're focused on with the new borrower is that we want to, we're going to have a loan officer, pull their credit, even though the credit isn't, a major factor. They're going to take a loan application and they're going to, look at their financials just like if it was any other lender, whether it was Chase or Wells Fargo. The difference is that we're not focused so much on the credit. We're focused on the borrower, their work history. Do they have a down payment? What mortgage payment can they realistically afford? We don't want to put stress on the borrower, and have them put down their entire life savings on the house. We want to make sure that they have cash reserves, in the event something happens, if work slows down. And the same for their monthly payment. We want to actually have a monthly payment that works, for them that they could realistically afford over a long period of time.
have you guys ran into any issues where everything lined up in paperwork and then for some reason or another it just didn't pan out after?
Like you mean in a traditional sale or with us?
No, what Mitch was talking about, financing the seller, and then, he said you guys go through this application and make sure that everything looks good for that buyer. But I'm wondering, because you're not going through the bank, right? You guys are essentially the bank for those people. So have you guys ran into any issues that maybe that person didn't pay, or like what is the legality of a house when they don't pay or stop paying? Like more information on that.
So one thing that we do is we just like when we purchase the property from the seller, we actually give the seller a performance deed. Just in the event that something happens to us, we get abducted by aliens or we disappear, the seller would actually get the property back with all the money that we put into it. When we seller finance it to a new buyer, we're going to do the same thing. So for some reason, if something happens to them and they disappear, we have a performance deed with that particular buyer. So, if they put a down payment down and then they just disappear or stop making the payments, we're going to try to work with them initially because we want to figure out what's going on. Like, why were they able to not make the payments? Was it
Mm.
something temporary? Like, something happened, medical wise, or was it a job loss, and trying to figure out if there's a way to help get them back on track. In the worst case scenario, if they do stop paying, we also have a performance deed. So, we would actually, which is a deed in lieu of foreclosure. So we don't have to go through the foreclosure process like a normal bank would. At the end of the day, if they just are not able or just don't want to make the payments or decide to walk away, we would be able to just record the deed in lieu of and take the property back at that time. The other thing too is like no matter what happens with the end buyer that we sell the property to, we have an agreement and obligation with the subject to property um, owner who we purchased it from. So we're going to continue to make those mortgage payments no matter if our end buyer defaults or can't make the payments. We'll continue to make the payments. We'll try to do a workout with the borrower that we're selling it to. And for some reason, if we can't, then we would end up taking the property back and then we would redo try to remarket it and sell it to a new borrower on, similar terms again. So
Nice. So what is the
mhm.
upside of or downside of working with you guys rather than working with a bank, I guess, for somebody that's trying to buy? Because I mean, from everything that I've heard so far, it's like you guys have better rates, possibly better terms. So what is the upside or downside of working with you guys?
I mean, the upside of working with us is that we're trying to provide housing to people who normally don't qualify for a mortgage. I mean, it could be someone who just got a divorce, right? And maybe they're going to get money from the sale of the property, but the other spouse blew up their credit, and they just can't qualify for financing. Whether it be credit or normal bank financing, maybe wouldn't allow them to qualify on their own. So that's a perfect opportunity for them, because they have a down payment. Maybe they have a 401k, right? That's just sitting there. And so, you could purchase a property using your 401k if it's from the company that you're employed with. It could also be, just money that came from the divorce. It could be money that comes from your business. When you're financing with a bank, they're going to look at your DNA sample before they give you money, especially right now, right?
Yeah.
So, our borrower may not be the typical borrower that banks want to lend to. Again, a lot of the loan officers, that are out there and the agents, they're working with people, day in and day out. And not everybody qualifies for bank financing. 65% of
Yeah.
people who apply get denied. So, I mean, that's a
Right.
pretty big number when you think about it. There's a lot of people
Yeah.
that would love to own a home. They just can't because, the way the way they make their money, it could be somebody who's an Uber driver. It could be, somebody who works for a tech company. Where what if you work for TaskRabbit and you were making $1,000 a week doing TaskRabbit activities, but the bank's like TaskRabbit, what do you do? I do whatever people ask me, or pay me to do. Okay, great. That would be a borrower that we would lend to, right? As long as we can see, like a track record, right? Like a history of work and kind of get an idea. Um, you know, we're way more open to financing, small business entrepreneurs. Like I said, it could be a restaurant owner, somebody who owns like a hair and nail salon place. Construction workers, contractors. I mean, there's so many variations of people that just don't get qualified for banks. And that's kind of the gap that we want to fill. We want to be able to help these people, purchase a home.
Yeah, that's amazing that you guys are providing solutions because, that's there's lots of problems in the world, and if you're able to solve a solution for somebody, that is the ideal place to be. So, what is you guys' process for evaluating potential investment opportunities?
So when we are acquiring houses, we like to look for homes that are under 5% interest rates. And we like to have newer builds if possible. That way they're more turnkey and we don't have to put a bunch of money into them and then try to wrap them or rent them out, whatever we're going to do with them. So we look for lower equity, newer builds, and low interest rate.
And have you guys ever like lost any deals or lost any money on a deal?
Oh, yeah, definitely. I mean, there's been plenty of times where you lose money on deals, but that's just part of it, where you learn from it and you don't make that mistake again. Not every deal you make money on, and that's just the reality of it. And that's totally
Yeah.
okay too, because every time we make a mistake, we learn. We're like, hey, we're not going to do that again.
Yes, and it's so easy, I think, for a lot of entrepreneurs that are trying to get into this realm that, they see so much information online on social media, like everything's great, you're going to make a ton of money, you don't have to use your money, all this information that you don't know if it's correct or not correct. And so how do you balance the pursuit of high returns and managing the risk?
So one of the key things are is that we have an underwriting model. So Alex was saying 5%. For the most part, we're really trying to stay within 2 to 4% interest rates. Just in the event that something, it takes longer, we have to hold the property longer. When you start getting above 5% interest rates, and you start getting into the 6.75 interest rates that are out there, it's a bigger down payment. Or it's not a bigger down payment; it's a bigger monthly payment, right? So it's harder for us to sell our finances that to someone at 5.5% if we're paying 5.5%, right? The other thing too is that we're looking at major cities. So there's a lot of like one of the example markets would be Texas. So Texas, like we see deals all the time where it's got a super low interest rate, but it's in a sub market that only has 3,000 people that live in the community. That's a much harder property to try to find buyers from than if we were in Houston, San Antonio, Dallas, or Austin, right? If we're an hour away from one of those metro cities, it's just the buyer pool is much lower because when we're in a challenging economy like right now, people are going to move where the jobs are at, and the jobs are in the bigger cities. So if we're underwriting a deal, we want to be in cities, in bigger cities with 100,000 minimum people or minimum
Right.
population. We want to be in the 2 to 4% interest rate range. There are compensating factors to go up to the 5. I mean, if we're in a city like Las Vegas, maybe Dallas, Denver, markets that are that are still doing really well, that would be like a compensating factor. The other thing too is we're trying to focus on properties that are under $600,000 because if you look at if you go into the city that you're in and let's say you go to the average rental rate of that market, right? And let's say the average rental rate is 2,700 a month. You don't want to go get a mortgage that's already at 3,800 a month and then try to find a wrap buyer, that's going to pay more than what your current mortgage rate would be.
Right. Okay. So, would you guys agree with the statement of people can buy properties without any money? And if so, how does one do that?
Yeah, I definitely agree with that. 100%. Yeah. So as far as when I actually got my first deal. It was a deal in. It was actually a deal in Hawaii. We I found the lead. Uh, Actually surrounded myself like actually with this team. The reason why I joined this team is surround people that are already doing it, or like go to a lot of like Facebook groups, let everyone know, like shout to the mountaintop that you have a deal, and if there's a deal, there'll be money, money to follow. So yeah, you don't need money at all. Just as long as you have a great deal, the money will be there.
Nice. So tell me more about the because a lot of people, a lot of the newer entrepreneurs that are getting into real estate, the ones that I've come across at least,
Mhm.
they have a lot of like that's their number one barrier that I've heard from people. It's like, oh, we don't have any money, we don't know where to find money, or we found a property but then we didn't get the buyer that was supposed to get it didn't come through. So how do you deal with that? How do you like reassure yourself that you're going out there, you're trying to get properties, you're finding properties, and then you're coming short on the money? Where do you go for these people? Where do they find them, or are they just not looking?
I would say like surrounding yourself, like going to meetups. A lot of partnerships are done, and a lot of new business partners are formed at meetups. You can go a lot. There's a lot of public Facebook groups. Like there's like a lot of JV cash buyer groups. There are like the creative financing group that Pace Morby actually puts out, and even just uh, talking to other like people in the industry, and getting putting yourself around those people. I will guarantee every time you will always find money. and and the biggest, I guess the biggest challenge I see for people is they just give up. Then you shouldn't. You just keep going until you find it, and that's what brought us here today. We just persevered and just keep going and keep going. Yes, we've lost deals, lost on deals, we've lost money on deals, but you basically just keep going. That's really the, I guess that's, just don't give up on doing that. Find it.
I think that's part of the underwriting model too, right? Because like, when you first start off in this business, you're out, you're raising capital, you're trying to buy your first deal. One of the ways, I think the best way, this is what I did, is I surrounded myself with people that were already doing deals, and I kind of got to learn, like what they were doing, why were they buying this property this way, how did they, I already knew, of course, comping and that stuff, but how are they looking at it? So if you find someone who's already doing it, that's a great way to get started. Um, doing JVs with people within the real estate communities is the best way to do it. If you go find a deal and you have a great deal, money always chases great deals. Great deals never have to chase money. All you got to do is like post your deal up in one of the Facebook groups. Like if you have a great deal, call us. We'll do it with you. We'll bring the money. We'll do the deal with you. There's a lot of people that'll do your deal with you if you have a great deal. I would say don't be in a hurry to do a deal, because you could do a bad deal, right? We've learned, because I mean this is the reason why, like we were saying, like we have an underwriting model where we're not going to go into a market where there's only 3,000 people there, because or it's got a 6.75% interest rate. It's because there's not enough buyers in a smaller market like that. We literally would have to knock on every door and know everybody in town in order to figure out who needs a house in that area. It's just you want to fish where you want to be in the pond where there's more fish, more buyers, more agents, more loan officers that are working in that market. And then also like the interest rate side of it, right? Like if we're buying houses that are under $600,000 and we're looking for interest rates, sub two deals with interest rates from 2 to 4%, unless it's in a premier market, and we're looking at newer properties that don't need massive rehab, budgets to them. Because even when we bring it to a new borrower, right, they're going to walk in and like it can't have no carpet. It can't be missing the kitchen cabinets unless you're going to sell it to a contractor or something like that, right?
Right.
Like your average borrower is going to want to be able to move in relatively easy. But I mean, if we're putting our underwriting model in place and we're looking at the deal, when we first started out, I mean, we're trying to, we're buying deals. We're looking at, sub two deals that had 5.5% interest rates, and they need rehab. And then we try to go wrap it to a new borrower. Before we started building relationships, it takes longer, right, to try to find the buyer, or to do that deal. It's just like if you were buying a flip deal, and let's say you bought it last. Let's say you bought a house wholesale deal right now, and you wanted to flip it, and you were using last summer's ARVs from June. That would probably be a bad idea, because the market has changed since this past May, June, right? So
Significantly.
like our comping and our underwriting, yeah, right. It's like you look at June sales, and that's usually the height of every sales season. So like in our underwriting model, we're not going past 60 days right now, and we're really trying to find properties that have sold within the past really 30 to 60 days. If it's a June comp, we're not really using those comps, or we're discounting it, just because like the market, is declining, and
Right.
we have to be prepared, unless we're buying it like severely discounted, where we're like, okay, there's enough room to cover this rehab, and there's comps, let's say there was comps from June that sold at 535, and now we're seeing them sell at 500 in the past 30 to 60 days. We're going to use the lower comps, and we're probably even going to be more conservative. We're going to be like, what, the ARV by the time we rehab it could be 480. So
So you guys talked about losing money. What was the most that you guys have lost on a deal? And what happened, if you guys could share the details?
My very first deal, I lost $7,000. It was my first ever. How I found the deal, I didn't use any of my own money. It was a fix and flip when I first wanted to get into fix and flips back in the day. Um, yeah, I found the deal on Bigger Pockets, and a lot of people in the industry have heard of Bigger Pockets. Found the deal on Bigger Pockets. Found the person that was in the JV with on Bigger Pockets as well. They brought the money, and I just brought the legwork. But we, like what Mitch said, like comping it is like really important. We comped it incorrectly. We were just basically hoping for the best. It was our first deal. We just want to, I guess, just shoot for the stars on the first deal,
Yeah.
um, and I was just really hungry at that point, and was just, I'm like, oh yeah, we can get it for this much money. But at the end of the day, when all the rehab was finished, it was way lower. So it was like a total of like 14,000, and then me and the partner at that time was at, we just had to split that. But yeah, that was like the biggest, one of the biggest losses I've had so far. It was
Wow.
scary. It was the first deal. I was like, where the heck am I going to come up with this? But you keep going, right?
Yeah, definitely. Comping is something that entrepreneurs that are trying to get into real estate investing, I think it seems very simple, but there's a lot of a strategy behind it. What do you guys suggest for people when they're doing comping? Like, what is the best way to actually get your right numbers?
I think what's really important is that you want to try to stay, like when we're comping, we're trying to stay initially within a half mile of the subject property. We're trying to keep it within the same builder. So if it's a newer home, you don't want to cross from KB Homes and go into Lennar, right? Because there could be a difference in quality and amenities that are being offered. So try to stay within the same development. If you're comping older homes, same thing. I'll try to find the comps within the first half mile. If we're in an area where there's limited comps, then we'll go out to a mile. If you're in a market where values are going up, and you can kind of go back in time a little bit more, then if it's in a market where the values are going up consistently, every 90 to 120 days, then you could do that. But in a market like right now, you definitely want to try to stay within the last 60 days, and you want to try to stay within a half a mile of where the subject property is, and you want to keep it within the same building style, and that could be, here's something too, like I was explaining to some of the other people on the team. Just because the square footage of the home is bigger than the ones that just sold doesn't mean that the per square foot price is going to make it $100,000 more. There was a house outside of Denver that we were looking at, and the houses were 1,150 square feet. They were selling like right around 4 to 425. The house that we had was 2,000 square feet. So if you're doing your comps, there's a couple of red flags with that. One, 90% of the houses in that neighborhood were all like 11 to 12, 1,300 square feet. And that was probably 85, 90% of the market. And then you have the subject property, which had 2,000 square feet. And you're like, the property looks very similar to all the comps in the neighborhood. Why is it so much bigger? And sometimes like it could be a wholesale deal you're looking at. Maybe the seller or the wholesaler is not disclosing, or maybe they don't even know that the garage was converted illegally, right?
Mm-hmm.
So if these are questions that you'd want to ask, why is this house so much bigger than the other houses in the neighborhood? So let's say if it was $200 a square foot, and everything in that neighborhood was selling at 200, or we'll say 300 a square foot, right? And the houses are 1,300 square feet. Just because that 1,200 square foot home is selling for 300 a square foot does not mean the 2,000 square foot home is going to sell at 300 a square foot and make it $100,000 more, right? You can have the biggest house in the neighborhood, and it's not going to sell, at the same per square foot price as all the normal homes in that neighborhood. So that's another key thing too, is when you're looking at houses. If you're in like a blue collar neighborhood, let's say, and it's a 1,200 square foot home, and you have a 2,000 square foot home, that probably would be a really desirable home, right? If it was a 4-bedroom, 2-bath for families. But if the highest comp in that neighborhood was 425, and you can't find a comp at 500, you're going to have a very difficult time selling that home, at that 500 mark, just because the square footage is bigger. And what I've learned over the years in real estate is that I like bread and butter properties. I want to buy properties that are entry level and mid level homes. That's one of the reasons why all of us agreed to purchase, and also seller finance to people, under 600,000, right? So if we're buying under 600,000, and we have super low interest rate loans that we can seller finance out to someone else, we're more likely to find buyers for that. I learned some pretty hard lessons doing high-end flips, and I know there's a lot of people out there that do high-end flips and they do great on them. But and when we're in like a very strong market where values are increasing, you can do really well. But what I learned is that there's less buyers for those high-end houses than there are for entry-level and mid-level homes. We just have a much larger buyer pool, right? And when you're doing high-end houses, the buyer is much more particular because they have a much larger down payment, and there's just less buyers. If you're in a super hot market, and then the interest rates are 3 or 4%, okay, you could jump in and you could do some of those properties. But if you do entry and mid level homes, your chances of losing money are a lot less. When I've lost money in real estate, it was usually always in the high end side. And it was because like we just, your refrigerators are $25,000, your stoves are $10,000 or $15,000, right? And so your renovation costs are much higher because the quality of work has to be much higher. When you're buying entry level homes, there's just a much larger buyer pool, and a lot of times you don't have to do as much renovations to it. It could just be paint. It could be you're just selling it just in the condition that you purchased it in.
So you would say for beginners that would be that should be their buy box, I guess, for the lower end, like not so high. And how do people in markets like California, like what should their buy box be for a beginner? Because I mean, I live in Southern California, and I mean your average house goes for about 900,000. So what would you say for them?
If you're in California and you're looking at deals, I would probably stick to the entry level markets: Bakersfield, Fresno, Visalia, Modesto, Merced, Turlock. For Southern California, it'd be Riverside, San Bernardino County, Murrieta, Temecula, Escondido, like entry level areas, it's just a much easier barrier of entry. You're going to have a lot more buyers. A lot of the buyers, if you look out in like Southern California, and you're out in Riverside, I mean, the people who buy homes in Riverside work in LA, right? So they have really good income, but they want to live in a much nicer home than $1 million 2 bedroom, 1 bathroom, 700 square foot house in Los Angeles, and they're willing to drive, hour and a half to get to work. So I just think that, it doesn't matter what market you're in. If you figure out what the entry level or entry price point is of that market for the buyer, you're just going to have way more buyers, and it's going to be easier for you to also enter, into that market and do the rehab for that property.
And what do you guys think are the predictions for the market, like in the near future? Because there's so much. The market's gonna crash. It's not gonna crash. Like what is your viewpoint on that topic?
My viewpoint on it is that winter has arrived and it's just going to get worse from here. We do believe that interest rates will go a little bit higher. And if it does go a little bit higher, that means it's going to be a lot cheaper for us to buy.
I think another thing too is that we're in a very interesting time right now. There's a lot of things in the world that are going on. If you notice, like the Feds have been increasing the interest rates for 2 years now. It didn't happen overnight. Um, and even though we're going into an election year right now, they're not going to just like magically drop the rates to 3 or 4% like next year. There's still like all the job reports are coming out right now. Recently, all of the GDP, the spending reports, and just it took us 2 years to get to this interest rate. It's probably going to take us 2 or 3 years before we start really ticking down. If you look back in history, I was asking my brother-in-law this question. I said, "Hey, I walked into Wells Fargo, and this is probably like I don't know a month or so ago, and I said they were offering 4% interest rate for 3 months, meaning that if you would put your money in for 3 months, they were going to pay you a 4% interest rate." And I asked him, I said, "When was the last time you saw that?" And he said the early 1980s, right? And so, like during the 1980s, it was we were coming out of the Carter era, and Paul Volcker was the Fed chair, and mortgage rates in the 80s were 15 to 18% interest rates, and people were still buying homes during that time. You know, but what they had to do was the Feds actually they had to increase interest rates that high in order to get inflation down. And it took, I think it was probably like a 2 or 3 year period where rates were that high, in order to kind of to get inflation to start dropping. And I think recently somebody was saying yesterday when we were doing some podcasts and meet and greets that they were talking about the Feds were, I think me and Verge were having this conversation. So Feds, they're saying that inflation is starting to go down right now, but the cost of services is not dropping right now. So what people are charging for their services is still holding pretty strong. And I personally think that interest rates are going to stay um, close to where they're at right now through at least a good part of next year. Just because, like, I think the Feds realize that they've raised the rates, and whether or not they raise them again, I think they're going to kind of hold steady for a little bit, probably at least through the first quarter of next year, and then if they start seeing uh, I think the job rates in March or April, that's what's going to have a big factor, right? So when we hit April and they look at the jobs at that point, that's going to decide whether or not they're going to start lowering interest rates or whether they're going to leave them. Um, and then, we'll kind of have to, see what happens from there. But I think right now in the next 24 months, we're going to have one of the most incredible opportunities to purchase creative finance deals and do a lot of seller finance, you know, throughout the entire country. So
Yeah, I feel like what we're doing is like creating like a whole new like sub market of all the deals that we do buy subject to with the low interest rates, and us seller financing it to people who are getting pushed out of the market. And I think that's our big goal is to help these sellers get out of these bad situations by taking over their mortgage, and giving people a chance to still be a homeowner. And I think that's like the most like fulfilling part of our job.
Nice. But does anybody agree or disagree with the fact that we're going to have a crash? Is it coming?
No, I don't feel like I mean all the signs doesn't point to a towards a crash right now. I think all signs point more towards I, I would even say like I would even say like recession. That's a little bit more like extreme. I would just be more as of a standstill and uh, I guess like a restructuring uh, type of market. I mean, uh, there are going to be like ups and downs as far as like the interest rates will affect everything else, but overall, I don't feel a crash is coming at all.
I think we're going to see values continue to decline, though.
Yeah,
I mean, each market is different. If you're in San Diego, like, from last summer to this summer, some of the, I had a house in San Diego, and last summer the neighborhood was selling close from 950 to a million. Now they're selling in the 775 to 850 range. So we saw $150,000 drop. But that's also a premier market, right? So that market will hold steady. And that's the entry level for that neighborhood too, right? Is like 750 to $800,000. That's Southern California. Now, if you're maybe in another market where there's lots of markets in Texas where we've seen like the values are definitely dropping. Um, One of the things too that we're tracking is that back in like February of this year, there was like 101,000 pre foreclosures in the United States, in the whole country. Now in 12 states, there's like close to 100,000 just in the 12 states. So the pre foreclosures have definitely ticked up. Las Vegas, just for an example, like in the next 4 weeks, there's like 3,000 houses going to a foreclosure auction.
Wow.
I think right now, like California probably has like 18,000 pre foreclosures right now. Texas is real close to the same number. Florida has a lot, like 18 to 20,000 pre foreclosures. So those numbers are definitely ticking up. You don't hear that in the news either.
Yeah.
They're not talking about that, right? About all those pre foreclosures. But what's happening is a lot of the forbearances during COVID, those are all coming due right now. And those people, they don't have the ability to come up with $30,000 to catch their mortgage payments up. They don't have the ability to do a refinance or to do a loan modification, because in the loan modification, the lender actually wants to look at your credit and income again. Then they want to try to change your interest rate, right? So if you can't
Right.
afford the house because your income dropped, or you something happened, and you had a 3.5% interest rate, you're not gonna be able to go out and buy a house at 7 or 8. Um,
Right.
so I think we'll probably see values correcting over the winter and kind of dropping down. I mean, I'm personally seeing it where there's some houses that I'm selling right now where, if you bought a house in 2020, 21, 22, those are a lot of the houses that we're seeing that are going into default, right? Because they bought at the very top of the market. If they bought prior to March of 2022, they got a super low interest rate. By May of 22, rates were at 5. They were pushing that 5% mark. And then through the summer, we were seeing 6.5, right? So, last summer like was probably the peak of the market, I think. And then we started to kind of go into that decline, when rates started going up. But now it's like a lot of the people who I think, yeah, bought in 2020, 21, 22, 23 are the ones who are going to be in trouble. And that doesn't matter. And that goes for multifamily and single family, as far as like the decline of values and the amount of defaults increasing.
Hmm. For the defaults, do you guys know if any of those have are tied to Airbnbs, or are they mostly just um, family owned?
I mean, I've had last summer, I had 70 Airbnbs. We're down to 22 right now. We started kind of we started selling off and kind of moving the portfolio around the country. Most of that all was in California. A big reason for that is because of the the regulations, the taxes, that they're charging. A lot of the cities, started charging TOT tax. We noticed the decline of the nightly rate, the bookings, as interest rates started increasing, inflation was going up, people started slowing down that travel that we've seen over the past 3 years. The Airbnb during COVID was incredible. I mean, the numbers were incredible. But last year, with the declining travel, the nightly rates, there was a huge saturation too. I think throughout the country. And so what happens is, in the Airbnb space right now, is that you're seeing um, states that are either banning it under 30 days, like New York did. They just had like a sweeping decision where, they just came through and banned Airbnb under 30 days, right? So I think a lot of I'm in a 7-figure mastermind for Airbnb right now. And I think across the country, you're either going to see them um, put regulation in place where you can't do it under 30 days, or they're going to tax it like California is doing. So like California, you have a 12% TOT tax for the city that you're in. And the state has already signed, like the House and the Senate already passed um, to impose a 14% statewide tax on Airbnb. And what happened is they've just shelved it right now for the next year. But all it needs to do is be signed by the governor, and it'll go into effect. So I think by 2025, California Airbnb will have a state TOT and a city TOT that will be a combined rate of about 27%. And if you
Wow,
look around
that's
the
steep.
country, all of us actually, we went and we were kind of meeting agents and loan officers and going to events in Colorado. And there was a local attorney that was explaining something similar, where they were trying to pass where it would be a combined state and city um, Airbnb tax of 27%, 28. I think it was 28. And so it's like, well, if people have to pay 28% to stay at an Airbnb, what are they going to do? They're going to go stay at a hotel, right? Or
Yeah.
or you're going to see a significant decline in the amount of people that do Airbnb, because the rate's going to it's going to come down much lower, you know.
Hmm.
So I'm actually moving out of most of our Airbnbs. Like, we're selling off the properties right now, just because of the decline, and I'm already anticipating that we're going to have these huge taxes that are coming. So yeah.
That is crazy. I know a lot of people that own Airbnbs in the high desert that are in the same boat right now and not making much money and losing a lot of money. So it's interesting to see how everybody's pivoting and how that
Hmm.
affects real estate as a whole. So,
Yeah.
um,
Think about it. If you bought an Airbnb based on, first of all, you never want to buy Airbnb. You never want to buy a house based on Airbnb income. If you did that, you're probably in trouble. I probably would try to figure out how to get out of that deal. Um, you definitely want to buy it based on your mortgage payment, right? And being very conservative with the Airbnb stuff. I think that's probably why Subject to is a great option, or creative finance, right? Because if you can get a lower interest rate, then you can make that model work better. But if you have a super high interest rate, and unless you really know your market inside and out. We were in Phoenix yesterday, over this last weekend, and there was somebody in sub 2 that was doing a higher end property, and they said they were doing great, but they were doing like more of pad split. They were kind of doing like a pad split version for um, like executives or professionals, and they had figured out that model. So I honestly think the Airbnb model is probably moving towards more towards pad split for professionals and um, you know traveling professionals, or it could just be like executives, or depending on what happens with the rental rates too. We haven't even got there yet. I'm not sure if you wanted to touch on that or not.
yeah, no, for sure. I think a lot of people, I have heard that from a handful of people as well, that the split pad option as being their to go to option. Um, because they're just not making ends meet. So,
Mm-hmm. I think we're going to see this. One of the things, I'll just throw this out there real quick, is because everybody is being priced out of purchasing a home right now. I think this next year, probably like March through um, probably a good part of next year, you're going to start seeing rental rates skyrocket, because if people can't buy, they have to rent, right? And rental rates have already gone up over the country, across the country, but the challenge is right now is the income's not going up, right? So that's probably going to be like very popular, where people are just going to go rent rooms, right, and do pad split. Um, all of us actually were talking about the various models of pad split that you can do, and some of those options, like if you get a divorce, right, and let's say you're in the military and you need to live close to the base, but you can't afford to pay $3,000 a month. What are you going to do? Would you rather go rent a room where you have access to a kitchen with other, like-minded people that you could pay, $1,300 to $1,500 for, because it's an affordable option for you? So I think with the rent, I think the rents are going to skyrocket this next year. I think they have a really good chance of doing that. And when they do, that pad split model could be very attractive to a lot of people. I would just be careful if you're an HOA.
So for the people that are trying to get into what you guys are doing, what do you think is the biggest barrier, especially right now, how the real estate, um, how we're doing in real estate currently? What do you think is their biggest barrier at the moment?
Biggest barrier I would think for people that are trying to get started is they just don't take action. So they just keep researching, watching endless videos. I've seen people for, at least 2 years just coming to meetups, looking at videos, and just not doing anything. So I think you just have to learn something and then take action right away.
I tell that every single day, every single podcast, I say the same thing.
To add on to what Alex is saying is the biggest barrier is not ringing up people on your phone. You have a cell phone, you have the numbers on Zillow, just go ahead and have a conversation with the agent. Nothing's going to happen. It's just another person. There's a lot of people who add a lot of anxiety to themselves because they don't want to look dumb or anything. But at some point, like, you got to be bad at first in the beginning before you can be actually great at having the ability to build rapport with agents or sellers. And if you don't take that action, you'll never accomplish anything.
It's better to take action on a good plan today.
Yeah, to add as well, I think biggest barrier is mindset. If you say you can't do it, yeah, you're not going to be able to do it. But if you keep telling yourself, hey, you have the goal in mind, or I'm going to make 10 calls today, or I'm going to make one call today. Oh, that's all you really need to do, and just keep adding up from there. And it ties back to take action, and you really just got to tell yourself that, like, I can do it.
Yeah, believing in yourself. It's hard when you don't, and
Mhm.
but I actually, it's funny enough, today I posted something about failure. It's just like failing. I don't remember exactly what it said, but basically failing is not the worst part. The worst part is going to be you looking back thinking, shoot, I should have done it. I should have just gone for it, because you'll forever live with that regret of not knowing what would have happened if you would have pushed through. So
Mhm.
if you guys have 3 tips for anyone that wants to get started, what would you say they are?
I would say to talk to people that have already been doing it and just keep talking to them, just keep getting advice from them, and just keep learning.
I would say surround yourself with people you want to become. You'll be the average of the 5 people you spend the most time with. That includes friends, family, co-workers. There's a saying that I always like to listen to: show me your friends and I'll show you your future. So who you surround yourself is going to determine who you become, right? Um, so if you spend time with people just drinking at a bar and watching NFL games all weekend, that's who you're going to become. If you hang around people who want to change their life, you're going to change your life. You're going to change your habits, and it's not easy, to not hang around with the friends that you grew up with, or even relatives, um, if you have a dream and a burning desire to change your life, you got to be around other people who want to do that exact same thing. So the decision's really yours, the other thing what I was going to say too is that, a good plan today, it's better to take action on a good plan today than a great plan next week. If you just keep watching videos, you're going to get what's called paralysis by analysis, right? You're watching a video, but you're not taking action. We were out in Colorado, and one of the best things that I think happened with someone we met out there named Ashton was that somebody asked him, hey, or somebody said, hey, has anybody out here, have they not made a call yet? Is this your first call? And he raised his hand. He actually had the courage to raise his hand. Yeah, I haven't made a seller call or an agent call yet. So what did we do? We pulled up a listing right there in the neighborhood. He made his first live call right there. And there was a couple of us that were actually coaching him and writing down the information. We didn't even have like a basic, script or framework, but we've all done it. So we just started writing some stuff out there for him, right? And kind of coaching him and helping him while we were standing there. And I thought that was one of the best things that I've seen, like it was just a pop-up event that we all did at a house that, that was a sub-2 deal, and he showed up and he took action right there, and but he was in the right place, right? He was 21 years old, but he was in the right place and surrounded by the right people who were going to help him. I think the community that you surround yourself with too is going to have an impact, because like now, like if you look at pre-COVID, when people were trying to get into this business, whether it was wholesaling, sub-2, whatever it would be, a lot of people were like hiding everything like a secret, right? We're all giving it away for free now, and we're trying to help and collaborate with each other. And, so I mean, the leads are free. If you want to find leads, go to Zillow, look at houses that are vacant on Zillow, call the agent, grab, you can grab a script from TTP, type in Brent Daniels. He has great, scripts. You can type in sub-2 scripts in Google. Go to any of the creative finance pages on Facebook. There's like all these amazing communities and people that are willing, to give you all of the information that you need, the scripts, and all you have to do is surround yourself with the people you want to be like and take action. And that honestly is probably the hardest thing for, I think, everybody to do, is to actually, like, when we totally remove, if we remove all of the excuses by giving you everything that you need to do, the question is, at the end of the day, will you take action?
Yeah. And that's the problem, that everything is there. We're just so afraid of failure. And we forget that nothing that we ever came across, whether walking or something new that we learned, we failed at everything at the beginning. But somehow we got older and we just see failure as this horrible thing. And I think there needs to be a reset in our brains, and especially entrepreneurial brains that are trying to get into any venture. They really have to hit that reset button and say, hey, just come in knowing that you're going to fail. But the biggest lesson is, what did you learn from it and how did you grow from it? And that's the best thing you could do for yourself.
So fear, like you said, fear is one of those things. I honestly think that is the main reason why a lot of people don't take action. So fear is false expectations appearing real, right? All it is just something that we were taught, and a lot of times we all learned conventional wisdom from our parents, who learned it from their grandparents, who learned it from their parents, right? In the circle of people that they surrounded themselves with, right? And it was just retaught the whole time. But, with the internet, I mean, so much of the information, that's shared on there, is incredible, right? So, but that's a big part of it, right? If you're hanging around with people who are super confident and have already made the calls, and if you one of the best ways you could do to get out of that situation is find somebody who's already doing it and figure out a way to add value to them, right? Like, hey, is there something that I can help you with, in your life and add value to you, so that I can actually surround myself by you and get to listen, to what you're doing and how you're doing it and why you're doing it. And if you start hanging around with those kind of people, you're going to notice right away that they have high self-esteem, they're very confident, and they take action, because they've done it so much. When you have high self-esteem, you can give it away to other people. and it rubs off, right? And and when you're hanging around with people who take action, they're going to hold you accountable. Just so you know, when you hang around with high performance people who take action, they're gonna hold you accountable, and they're gonna make sure that you take action. And if you don't take action, they're gonna let you know, as they should, right? Because they want to see you be better. They want to see you achieve your full potential.
Yeah. And that's why it's important to be with the right people.
That's why I like working with us so much, is because we talk about something, we figure out a plan how to do it, and then we execute.
That's amazing. So, how are you guys um, using social media to grow your company or to leverage information for other people?
Yeah, so with social media, we're just trying to basically document our journey. And I think that's the biggest thing. Like people want to see people. I think for social media, I think people have this like misconception is like all you see, and all you expect is like successes on social media. But I feel like for people to, I think like actually like organically grow your followers is for people to relate, and people want to see your failures as well, so they don't have to do they don't do the same thing. And I mean, yeah, I mean, social media does give this this imagination, and like, oh, like people get discouraged when they see something on Instagram, like, oh man, I want to be there. I want to be in those. I want to be in a Bugatti. I want to be in a Maybach, and then it discourages them from like taking action. But social media, I feel like, is a tool to tell your story, and that's I think that's the like overall goal of I think of our social media is to tell the story of where we came from. So I don't know if you go into our like profiles like individually, like you'll see for like where we started, and you see all the bad videos that we filmed, and whatever it may be. But you see it continue to like improve, and that's how it is like with life. Like we want to fail forward as opposed to just fail and then stop.
I love that. Fail forward. And I think also with social media, it's a double sword edge, right? Like it's a lot of people, a lot of entrepreneurs think that success is overnight, but they only see a little bit of what went on for you to get to the place where you're at. So, for those of you that are looking at people that are doing great, don't forget that that didn't come overnight. It took failing, it took getting up, staying up late, getting up early. It took working on weekends, right? It took commitment. And if you're not committed and really do the work that you need to do, you're just never going to get there. Don't get discouraged by people's success. Know that it didn't happen overnight and that could be you, but you have to give it time. Everything comes with time. So, and we'll end this with a rapid round. It'll be 6 quick questions. If you guys want to answer it individually or one person take a question, whatever you guys decide, I'll leave it up to you guys. Let me know how you guys want to do it.
I think it would be fun if we did it individually. I'm curious to
Oh,
see what everyone's answers are.
I love that. Let's do it.
I agree too.
Great. Okay. So, first thing, what is one thing you wish you knew when you started this journey?
One thing I wish I knew when I started this journey was to just surround myself with the right people,
Hmm.
and just to go to more meetups, to go introduce myself to people that I didn't feel comfortable talking to, and just put myself out there.
Oh, for me is that you don't need you don't need money to buy real estate. That's what stopped me a long time from moving forward.
Hmm.
I think for me, it would have been I would have started on social media, right? And I would have surrounded myself with the right. If I would have started out with the right people, and I would have created my journey on social media, I think that probably would have had a serious impact. It wouldn't have taken me as long to get to where I'm at. And yeah, I think that's pretty much it.
For me, it was talking to the right people earlier. I just didn't know how to talk talk to them in the beginning because I'm the youngest one of the group. I'm 22, and when I first started going to real estate meetups, I was just a 20-year-old kid or 19-year-old kid, just like, how do I even provide value to these guys that are actually getting the results that I want to eventually get?
So for you, what helped you, Angel, come out of that shell? For all those people, those youngins that are out there second guessing themselves because they're young, what would you tell them?
To not overthink it and just talk to them, just have a
Mm,
normal conversation. At the end of the day, they're just a regular person. They're just as human as you are, and just have a normal conversation with them. And what you'll find out is a lot of people are really excited to help you get your first deal, and like they'll give you tips on how they did it. They'll give you information on how to do it. But then at the end of the day, it falls on you to perform on the tips that they gave you. Because if you don't perform and you get all this knowledge, at the end of the day, you just wasted your time,
mm, love
and you
that.
wasted their
Thank you.
time too, because they're technically rooting for you because they want you to succeed, just as they succeed themselves too.
Yeah, thank you for that. Question number two. What has been the most challenging part of your journey and what did it teach you?
I think mine is keep it simple. A lot of I've learned some things during in my journey. One of them is the first deal I ever did was in 2001, was a subject to deal, and then I did do it again until Pace started subject to. It was the first deal I ever did. The other thing I noticed too was the first wholesale deal I did was I bought an apartment complex off of Craigslist in Imperial Beach for like $425,000, and I wholesaled it 2 weeks later for $650, and then I didn't do it again. I was like, oh, let me go do it the hard way instead. Instead of just keeping it simple, I found out these things that worked, and then I guess it would be called shiny object, right? Like you see something, you did it, it worked, but then you saw another model and you decided to go out and try that instead, right? um, so if you're doing something that works and you're good at it, or you're surrounded with people that are good at it, I would just continue doing that, right? And try not to focus on all the other 50 million things that people are promoting on social media. Or you got to find what works for you, and once you do it, just stick with it and get really really good at it.
Mm, I love that. It's funny because I went to WealthCon with Ryan Pineda a few months ago, and I was thinking about pursuing real estate and got into a lot of the learning um, path. And I met this young kid. He was, I don't know, maybe 24, 25, 26. And we were having a conversation about why I wanted to go into real estate. And so I said, I think it's a great venture. It will bring in um, good income and just trying to diversify. And basically, I was guilty of that. I was guilty of shiny object syndrome because I have it down here with the social media, but here I am trying to do something new. And I mean, it's hard enough to start to begin with, to start, but then I already have another business, and this kid like just blew my mind. Was like, why are you trying to do this? Like, if you already have something down, why are you trying to get shiny object syndrome and start over? Like, I wouldn't do that. And it was the best advice that I received from anyone. So, but sometimes we have to go through those moments to have that aha moment and say, okay, this is not for me. I need to stay in my lane. And it's humbling, but we need to be open to receiving messages too. It's not always easy.
Yeah, I think like the hardest thing, I guess part of this is uh staying consistent. It is a discipline that you have to just keep doing, just like working out, right? um Even the days you don't want to go to the gym, like you have to go. Even the days you don't want to and call real estate agents to get your next deal, like you should do, because you're one call away from, I guess, like changing your life, or one, like, I guess, one rep away from getting that body you've always wanted. So it's that's always going to be the most like challenging part, and uh, I fight with myself every day with that, and then it becomes habitual after that, I feel like.
I think the hardest part is definitely shiny object syndrome in the beginning. I couldn't figure out exactly what I wanted. I tried a bunch of different things, and then I finally decided that creative finance was the one, so I stuck with it and just kept being consistent and just didn't stop.
For me, the same thing would apply. It would be the shiny object syndrome. When I first started back in 2021, I went into wholesale cash deals, and then from there I jumped over to trying to do flips, and then from flips, I went back to the wholesaling, and then I met Alex back in April, and then I got into the creative finance space, and within a month, I had my first two deals under contract. And when people hear my story, they assume automatically, like, whoa, you must be really good on the phone. But I had 2 years of experience before trying to calling sellers that I built over time to that then I was able to carry over when I started calling for creative deals.
Love that. Yeah, most of our um, failures, right? Or how people choose to see. I think they're learning moments for me. I always feel like you could always carry them over to other ventures, even if you feel like that didn't pan out and it failed. But the knowledge that you got from that, you will forever have that, and it will be used in the future. So don't be discouraged. Question number 3: what is the best piece of advice you've ever received as an entrepreneur?
The best advice that I've ever received was just be consistent and just don't stop doing it. You have to do it over and over and over. In the beginning, I was like, that's not true, but it's very true. You have to just keep doing the same thing over and over until you get really good.
Hmm.
My, I think, best piece of advice is uh, shut up and just pick up the phone. Stop
Hmm.
complaining and just pick up the phone.
Love it.
Mine would be the paralysis analysis. Um, well, when I first got started, I would underwrite the deal before I had made the call. And I know there's a lot of newer guys who are trying to get into the space where like they're underwriting the deal in for every possible scenario, whether it be long-term rental, short-term rental, a flip, or and and then turns out when you pick up the phone, they don't even answer, and you wasted a good 10, 15 minutes underwriting the deal because you wanted to be sure of what the numbers and the offer you were going to offer to the agent or seller,
Hmm.
and it was just call first and then underwrite.
Hmm.
I would say take consistent action daily. Don't try to make it perfect. Just jump on and do it. If you have the ability to record your calls, you can go back and listen to them. Practice in the mirror. Like if you stand up and you're standing in front of a mirror practicing, um, initially, like you don't want to like memorize a script, but what you're doing is if you're reading or if you have notes next to you, like right now, like I have the 4 pillars on my phone. When I call somebody, I always have them right there, even though I know what they are because I want to follow a framework or a format, right? Just in case we get off topic or something else. But the consistent action daily of calling people, talking to them, it's just like working out, right? Like if you started out, you haven't worked out in 5 years or 2 years, then all of a sudden you start working out today, you're not going to be great at it today. It takes time, repetition. You got to put the reps in, you got to put the time in,
Hmm.
and there's no better person to invest in than yourself.
Hmm. Love that. So true. Question number 5: what is the most satisfying aspect of what you do?
I can tell you right offhand what mine is. um, I've reached a part now where like stuff doesn't make me happy anymore. It's not cars, it's not houses, it's not stuff. It's really watching the people around me grow and seeing them achieve all these different things, because I've been able to achieve so many of those things now. And Now it's just more of like, if I can surround myself with other people, like you said, Angel said it earlier, he's 22 years old. I'm 48. I'll be 49 next month. But what moves the needle for me now wasn't what moved the needle for me when I started in real estate. When I started in real estate, it was cars. I mean, it was houses, it was all this stuff. Well, I've got to achieve that stuff now, right? So now it's, for me, it's seeing other people around me achieve those things. It's being able to help your family, being able to buy your family cars and houses, and help them out financially, provide jobs for them, those kind of things. Also, helping the people that you surround yourself with. Like, they have goals too. So if you get really good at helping other people achieve their goals, you'll be surprised how fast you hit your own goals.
Yeah, I guess the satisfying part of, I guess, what we're doing right now, um, is, I mean, giving people a home. Because growing up, and that's the reason why I became a real estate agent in the first place, is handing the keys to someone. I know, as corny as it sounds, handing the keys to someone to their first home. And since we're not in that type of market where it's that easy, being able to find creative ways in doing that is what gives me like satisfaction. But as I guess, a general like entrepreneurial sense, is, yeah, what Mitch said, is being able to take care of a family, and being able to, like, being an entrepreneur, like, helped me, before I joined this team. I had my own property management business, and that in itself helped me, I guess, build a house for my mom in the Philippines, and giving me that flexibility, and just helping out family and people who've helped you out during this journey. Like, you want to pay them back, and like, I guess that would be like the biggest like satisfaction.
For me, the biggest satisfaction is definitely helping homeowners, right? So on the side of where we're helping them out of a situation, and then also helping a homeowner get into a home as well when we owner finance it to them. But it's also being our own boss. To me, is really satisfying, where we're actually building our own company versus building somebody else's dream. We're able to build our own dreams, which is really amazing.
Yes.
For me, the biggest satisfaction is getting people into homes. I come from the Hispanic a community where most of us are ITIN holders. We don't have an SSN, so to secure financing for a traditional home makes it very, very difficult. Like, there are some banks that will give out financing towards ITIN buyers, but it comes with a downside. They ask for a huge upfront down payment, and they give us above market prime rates. So I explored creative financing, and I found another way that we can actually buy homes and potentially get these other ITIN buyers in as well. Because most of them don't even have credit scores, because they don't even know what credit cards are. And if they do, they have there's one credit card, $500 limit on it, and then they max it out, and then their credit score is tanked.
Yeah. Wow. That's awesome. So last question. If you had a message for any entrepreneurs who want to become real estate investors, what would it be?
I would say to be consistent.
Love it. Nice and simple and powerful.
For me, is surround yourself. Yeah, I think that's the general pattern that you've been hearing from all of us, is surround yourself around the people that you want to be like.
Go ahead, Angel. I'll go after you.
Okay. It's the same thing. It's just being consistent overall, be an action taker, and surround yourself with people who are already there where you want to be at.
So here, I have something for you. I'm going to read. I didn't write this, but I think it applies. Anything you want in life is on the other side of hard work, discipline, and consistency. Life doesn't need to be fair for you to succeed. You have to take 100% responsibility and become the creator of your future. You have to go all
Mm.
in on your goals and dreams. Don't let anyone else dictate your life.
Oof.
Love that.
What book was that? That was beautiful. What book was that?
That's Dan Pena. So, yeah, I listen. There's something. everybody calls him like this crazy old man, but there's something I listen to every single morning before I start my day. If you go to YouTube and you type in Dan Pena isms, he has like 116. Um, they're like what do you call them, affirmations, and so I listen to them every single morning. When we were traveling around Arizona, we played them in the car when we were on the way to Dream Makers, to some of the sub 2 meetups, and you just listen to them, and a lot of them apply to like who these dreams and ideas that you're having of what you want to become. If you start listening to these and apply them in your personal relationships, your business, you'll start to notice that your pattern, your mindset, and all these different things will start to change. And so, they're pretty good. I listen to them every single day, but that's actually where that came from.
That was amazing. I love that message. But yeah, I mean, just like this guy said, there was a lot of information in this whole episode. Um, but the top three was networking, getting in the rooms with the right people, and applying. And I think out of all those, probably one of the most important is applying, because if you can get yourself there to like actually do the action, nobody can. Even if you're in the right places with the right people, you have to be accountable for yourself. And there's so much information out there, right? We're not successful because of lack of information. We live in an era where there is information wherever you go, free information at that. So, make sure that you guys are doing the work. Um, I really hope that you guys are able to take it all in. And I want to thank you guys so much for taking your time, some time to meet with me and talk. I appreciate you guys. If people want to get in a hold of you, where can they find you? And are you looking for anyone specific?
Thank you for having us.
Thank you.
Thank you.
So what we are looking for more real estate agents to work with and also mortgage loan officers as well. And how you can find us is our business page, Invest PMP, and also my personal page is just Alex Kamenetsky at Instagram.
That's exactly what we're looking for. If you need any help with your first deal, we're happy to help and JD with you. And Also, you can follow us on at InvestPMP to like follow our journey. You can follow like my personal journey as well. My Instagram is Delio with Virgilio. And yeah, well, let us know if you have any questions.
We're always looking for more loan officers, agents to work with, and also people who are newer and trying to get into the creative finance community and trying to get their first deal under contract. We are here to help, so feel free to send over any leads that you may have trouble closing. We'll help them close them for you and take them all the way to the finish line. And then you can find me at InvestPMP or my personal IG at I am Angel Perez 1, or you can also shoot me a text to my personal phone number, which would be 916-613-6143.
I think they pretty much hit it. We're looking to build quality relationships with agents and loan officers around the country. We want to educate as many people as possible about creative finance. Uh, that there's options out there for home buyers who don't qualify for normal mortgages. And we just want to be able to help all the young people out there that are just starting out and want to learn. Sure, very soon we're probably going to be doing. Pace actually asked us to start doing trainings in January, so we'll probably start doing like Zoom and Facebook Lives and that kind of stuff where people can jump on and listen, to what we're saying, how we're talking to people, live conversation, live seller calls, and I think that'll probably be a big help for everybody. You can also find me on the PMP Invest Instagram, or you can also find me on Instagram at Cashflow Mitch, and we look forward to seeing you along your journey.
That's amazing, guys. Thank you so much for all the value you guys provide. For the January training, would they be able to find you that information also on in the same handle?
Yeah, we'll start posting in the PMP website, and then also on our personal as we start offering the variations of training. Whether it's on the Creative Finance page or our own Zooms. So we're going to be doing a lot of live Zooms. Um, Actually, for loan officers, we're going to be doing live Zooms Monday through Friday, every single day until the dawn of time or until we could build enough relationships where we don't even know what to do with ourselves anymore. And we're going to be doing the same thing for agents as well. We're going to be doing live events daily. So whether you're an agent, a loan officer, you're going to be able to jump into these Zooms that we're going to host every single day, Monday through Friday, Monday through Saturday. And we're going to be explaining creative finance, what you can do to work with us, whether it's your listing or another listing on the MLS, and what loan officers can do to bring these buyers, out of their databases that normally don't qualify for mortgages, so we can all do a ton of deals together and work together, along our journey.
Great. And do they have to be in a certain state or city?
Nope.
Nope. Any city, any state in the United States, you'll be able to jump into Zooms. If you're trying to get deals done, whether you have, it's your first deal and you're trying to do sub two, this would probably be, we're going to do several of these calls. It's going to be really consistent. It's going to be every day, Monday through Friday, for agents and loan officers, and then we'll add in the investor, Zooms as well. I'm not sure if we're doing those every single day yet. Uh, we're just gonna try to get the time slots down, so that way we make sure that we're consistently providing you quality information. So
There you go, guys. For anybody interested, how I said, there's tons of resources out there. You just have to learn to apply. So thank you so much again for everybody that showed up and tuned in to listen to this episode. I appreciate your support. If you guys haven't hit subscribe, make sure you follow and subscribe. A big shout out to Studio R45 for making this episode happen. And I will see you guys on the next one.